Hello everyone, today we are going to learn about subsidiary books, grade 11th, chapter 5. Subsidiary books are the books of repetitive journal entries. That means the transactions which are repetitive in nature, for example, purchase sales, their respective returns and their respective bills are entered in their own separate books, and these books are considered as subsidiary books. Subsidiary books are mainly divided into three main categories: cash book, purchase book, and sales book. Along with purchase book, there comes purchase returns and bills payable. Along with sales book, it comes sales returns and bills receivables. So, purchase transaction, if it is made in cash, it will be only entered in cash book. But purchase transaction, when it is made in credit, then it will be entered in purchase book. If at all there are returns, it will be entered in purchase return books. And if there are any payables, they will be entered in bills payable books. Rest of the transactions are entered in journal proper. First, we'll be looking into cash book. Cash book is a book of original entry of cash which will maintain the cash balance in the firm. All the cash inputs and all the cash outputs are mentioned in cash book. That means the recording of cash inflows and cash outflows are taken into consideration only in cash book. A cash book is a book of primary entry. All cash transactions are recorded in the cash book. It also serves the purpose of ledger account, and therefore the cash account and bank account are not maintained separately. They are considered as cash book with double column. Features of cash book. Cash book is used to record all the transactions but which are done in cash only. All the receipts are recorded in the debit side. All the payments are recorded in the credit side. Chronologically, the transactions are recorded in cash book. It performs the function of both journal and ledger. Why we need a cash book? To find out the total cash receipts and cash payments during a given period. To ascertain the balance of cash in hand and at bank at any time without actually counting cash and examining the bank passbook. To verify the correctness of cash in hand also in bank. Simple column cash book. It is prepared like a cash account in a ledger. All the cash receipts are entered in amount column on the debit side and all the cash payments are appeared on the credit side of the amount column. Cash book is closed and balanced at the end of the month. That means every month we will have a correct cash in hand balance. Simple column cash book or simple cash book has the following format: date receipts, LF amount, this is the debit side, and date payments, LF amount, this is the credit side. All the incomes will be debited, all the payments will be credited. The closing balance will be carried forward to the next month. Here we can see the example. If the goods are purchased in cash, cash goes out, so it is entered on the payment side. If the goods are sold, it is to sales. That means the money is coming in the business. That is why it is on the debit side. Rent paid on January 8. That is also credited because it is payment. So we have total inputs or inflows of 25,000 and total outputs or outflows or payments of 11,000. That is 10 purchases and 1 rent. So on deducting 25, With 11, we will see the remaining balance, that is balance carry down. That shows at the end of that particular period, the cash in hand is 14,000, that is end of January, and for the next month, it is opening balance. Next, we have to see is a double column cash book. In double column cash book, we have a separate column for bank. In some firms, they maintain column of discount as well. We can see the format of a double column cash book. Date particular LF cash and bank. This is for the debit side, and same way repeated date particular LF cash and bank on the credit side. All the inflows of money in cash will be entered in the cash column, debit side. All the inflows of the money in bank will be entered in the bank column, that is debit side. Same way, outflow of money in cash will be entered in the credit side cash column, and outflow via check or outflow from bank directly will be entered in the credit side of bank column. There is a peculiar entry where both the transactions, both the columns are affected, that is contra entry. Before seeing that, we will have a look on a petty cash book. Petty cash book is used to record small amount of expenses. Day-to-day expenses like stationery, cleaning charges, postage, courier, etc. A petty column cash book or a petty cash book has a very less receipt side because only once the amount is receivable, and it has all the segmentation or columns of various expenses which were made. You can see on the screen it has only one debit, that is, say a big lump sum amount is taken in petty cash, and where it is used for various functions that will be mentioned separately in separate column. Contra entry is an entry where in single transaction both the sides of cash and bank are affected. That is called contra entry. There are only two transactions in which there is a contra entry. Either you deposit money in the bank, what effect it will have? It will reduce the cash in hand, but it will increase the cash at bank. Same way, either you withdraw money for office use. There will be decrease in bank balance but increase in cash in hand. And in both the cases, both the sides are affected when it is double column cash book. And to give the effect, there is a rule. Letter C is mentioned in the LF column of that particular transactions. Now we'll see the example of contra entry. Here you can see on January 8, 2000 was deposited in a bank. So in bank it comes in. So it is debited on the bank side, but as it is goes out from cash in hand, it will be credited in the cash column. And same date is mentioned in the date column. Column is bank. The effect is particular is cash. Here column is cash and the effect in the particular is bank, and it is denoted by the letter C. Same way the other transaction, 3,500 are withdrawn from bank for office use. So when the money is withdrawn from bank, in bank it is a payment, but for what it is withdrawn by cash. And cash increases, so cash comes in, that is on debit side. And by from where does the cash comes? Cash comes through bank. The date remains same for one transaction. Two effects are happening. This is called contra entry. Next set of books that we are going to learn is purchase book. Recording of the purchase which are done on credit only. If there is any cash purchase, it is not entered in purchase book. Or if there is any purchase of asset, it is not entered in purchase book. So where it will be entered, you can see. If it is a cash purchase, it will entered in cash book. If it is a purchase of asset, it will entered in journal proper. Only and only credit purchases are entered in purchase book. Now we are going to see the format of purchase book. Format of purchase book is as under date, particular name of the supplier. Here it is invoice number, that is a bill number. Bill that we receive when we purchase something. If some digits are mentioned, we have to mention over here. Name of the supplier, that means from whom we have purchased. Details are the denominations of the goods or and discount thereon. Everything is to be mentioned here, and a final net amount will be written here in the outer column. Next important subsidiary books is sales book. Same way, the credit sales transactions are mentioned in the sales book. No cash transaction or no sale of asset should be mentioned in the sales book. Here also, if the discounts are allowed, they are to be mentioned in the detail column. The format of sales book is as same as purchase book, date, sale invoice number, name of the customer, LF, details and amount. Again, the details will have all the denominations of the goods sold, discount if any is to be deducted from the total amount, and final amount should be mentioned in the outer column of purchase and sales book. Both the purchase and sales book should be maintained in a chronological order, same as cash book. Next important book is purchase return book. When we are making credit purchases, there are chances some goods are of not the same quality which we have ordered for. Sometimes there may be minor defect. Sometimes there may be minor difference. For example, if you have ordered for some commodity in black color, but out of mistake or out of any reason, the supplier might have sent that commodity in blue color. So there may be any reason because of that there are purchase returns. This book is also termed as return outward books. And one evidence should also be kept along with the purchase return. That means that will deduct the amount of purchase returns from the amount payable. And that evidence is called debit note. Whenever we have a purchase return, we will prepare a debit note for the creditor. That means that amount we will be not paying at the time of payment of the credit purchases. We are not paying because we have already returned the goods. So in the format of purchase return, we have to remember Debit note number instead of invoice number. Rest the format is same as purchase book. Likewise, we have sales returns. Here also, when our customer is not satisfied with the quality or if there is any minor defect, it may happen that the customer will return the goods to us and that returns books are maintained. Sales return books is also termed as return inwards and they are to be again adjusted and their evidence is also to be maintained. The evidence for sales return is called credit note, which we will give to our customer. That means when we will receive the payment from the customer, this amount is reduced or this amount is deducted. Rest all the format is same for the sales return book also. Next important books are bill books. Bills payables are related to credit purchase. So instead of paying in cash, if the businessman writes a bill with a due date, that amount will be entered in bills payable. This is the process when the creditor becomes our bill payable. That means instead of creditor, we will have a liability of trade payable or bill payable. Just like bill payable, we have bills receivable books. That is for our credit sales. Instead of debtors, the customer will pay us a promissory note that they are going to give the amount on a due date. So that amount or that due date will be recorded in a bill receivable book. So the rest of the entries which are not included in all these six books, that is purchase, sales, purchase return, sales returns, bills receivable and bills payable, the rest entries will be entered in a journal proper. This is a book of miscellaneous entries where adjusting entries, rectification entries, closing entries, opening entries, and transfer entries are prepared. Most of the times, journal proper is prepared for miscellaneous expenses. Of course, it will start with opening entry and close with the closing entry. This is for the subsidiary books. Thanks for watching. Take care.